Welcome, dear traders. You are watching a recap of the Asian session. The Santa Claus rally did not take place despite high expectations. Wall Street failed to maintain its upward momentum on Wednesday. All three benchmark stock indexes slid in the red. And Japanese, Australian, and New Zealand stocks declined as well. Risk appetite decreased sharply following fresh U.S. market starts and hawkish comments of Fed policymakers. In December, the U.S. Producer Price Index logged the biggest drop since 2020, and retail sales also fell sharply. The results are mixed. A decline in indicators gives hope for a slowdown in monetary tightening, but increases recession fears. Dallas Fed President Lori Logan made an interesting remark. If you're on a road trip and you encounter foggy weather or a dangerous highway, it's a good idea to slow down. Likewise, if you're a policymaker in today's complex economic and financial environment. However, not all policymakers support her cautious approach. Kansas City Fed President Esther George believes that the top priority is price stability. It's crucial to return inflation to the 2% target. St. Louis Fed President James Bullard said that rates have not reached a restrictive level yet, so they could be hiked to 5.5% by the end of the year. Cleveland Fed President Loretta Mester is also sure that the regulator needs to raise the rate above the 5 and 5.25% range. James Bullard shares a similar point of view. He assumes that in order to tap inflation, the benchmark rate should be raised as soon as possible. Risky assets had no chance given the hawkish comments of Fed policymakers and the recession fears. However, a steep economic downturn is also rather negative for the US dollar. Although it enjoys demand as a safe haven currency, its momentum is no longer as strong as it was in 2022. It appears the greenback has already reached its peak. Now a downtrend prevails. It's likely to remain intact as long as there are risks of a monetary easing by the end of 2023. For example, yesterday, after the release of unexpectedly softer reports, the greenback made an attempt to break through a 7-month low of 101.50. However, in the morning, the US dollar managed to recover to 102.20. It was moving in a narrow range of 102.20, 102.50, gradually declining versus its rivals. For the yen, this year is likely to be much better than the previous one. A weak dollar is not the main reason. Bulls ignore all negative fundamental factors such as downbeat reports, concerns about the decline in China's demand, and even the recession risks in the United States. Optimism was fueled by expectations of the policy reversal by the Bank of Japan. Haruhiko Kuroda's decade helming Japan's central bank nears an end. The government is likely to appoint a new governor as early as February 10. The yen is likely to keep climbing until the government announces a successor. The uncertainty over the future steps on the monetary policy is bullish for the yen. It has already recouped some of its losses against the US dollar, trading at 128.30 in the morning. The dollar-yen pair broke through the former weekly support level, which turned into the resistance level of 128.65. After that, it dropped to a monthly low of 127.20, and the next support is located at 126.40. The pair was moving in the price corridor of 127.80 and 128.90 in today's Asian session. As the Bank of Japan sticks a dovish stance, the pair may face pressure only because of the hawkish comments from the Fed policymakers. Speculators should also pay attention to the movements of government bond yields. Hawkish comments also affected commodity currencies. The Australian dollar as a risk-sensitive asset sank to 0.6896, besides the US dollar advanced in the morning. The Aussie also slipped due to falling oil prices. Even money injections by China's central bank did not help the Aussie move higher. The situation in China is rather controversial. The country is preparing to celebrate Lunar New Year beyondly. However, the economy is facing huge challenges after a sudden exit from the 3-year lockdown. And this is why the yuan, which is growing on money injections, will hardly stimulate an increase in the Aussie. The AUD USD pair retreated from a 0.6936 in the high of August 2022. It may approach the lower border of the range of 0.6879 and 0.6950. Traders in New Zealand are now assessing two breaking news. Inflation in the country soared by 11.3% in annual terms, touching the highest level in the last 32 years. Apart from that, Prime Minister Jacinda Ardern announced her resignation today. She will stand down no later than 7 February, and the election is scheduled for October 14. The New Zealand dollar dipped to 0.6391 following these pieces of news. Recession fears are also weighing on market sentiment, which is bearish for the risk-sensitive kiwi. Yesterday, it reached 0.6530, its highest level since June 2022. Today, NZD USD pair was trading in the range of 0.6385 and 0.6451. However, its downward movement is limited thanks to the US dollar's weakness. For this reason, the losses were rather small. Dollar bulls are trying really hard to maintain an upward movement due to expectations of a monetary easing by the Fed. Don't forget that today and tomorrow, Fed policymakers will deliver speeches. And that's all for now. Subscribe to our channel and keep close tabs on the latest market developments. See you soon.